Hello everyone. In this video, we're going to discuss the accounting for payroll costs for employees and employers. Have you ever wondered why when you receive your paycheck, the net pay is so much lower than the gross pay? Well, here you can see what was deducted from your paycheck. So first thing is the federal and state income taxes. These are tax payments that you paid in advance through your paycheck, and it's used to offset your federal and state income taxes when you file your tax returns at the end of the year. And there's the employees portion of the Social Security and Medicare tax, and for the fringe benefit, employees' contributions to health, dental, disability, life insurance, and retirement plans. As for the employer pays the same Social Security and Medicare taxes and also makes contributions to the fringe benefits. The only cost that's unique to the employer is the federal and state unemployment taxes. So again, the employee costs includes the federal and state income taxes, and these are deductions taken from the paycheck and sort of set aside into your account. And so at the end of the year, when you file your income tax, then you have federal income tax liabilities and state income tax liabilities, which you can use the amount that you prepaid to pay off these liabilities. So if you pay more than what you owe, that's when you receive a refund. The next item is the FICA, Social Security and Medicare taxes. So the FICA taxes together, it's 7.65%. So the 7.65 is made up of 6.2 of Social Security and 1.45 in Medicare taxes. So remember that the 6.2% Social Security tax is always capped off at a threshold. At this point, it's 118,500. Once you reach that amount, you no longer have to pay the 6.2%. Employees also pay their share of the fringe benefits, whatever the company offers: health, dental, disability, life, and retirement plan. The employer cost, as we said, includes the matching of the FICA, and next is the employers pays the federal and state unemployment taxes. Now, this cost is unique to the employers only. Employees doesn't have to pay this. Employers are basically paying on behalf of the employees. So when the employees are being laid off, then the employee may go to the state unemployment office to make a claim. The unemployment checks are paid from these accounts. And the fringe benefits, as we said, are contributions made by both employee and employer. Okay, so let's look at an example. Here we have Hawaiian Travel Agency with a total of 20 employees, and the month of January, the gross pay is $100,000. And so what kind of deductions do we have? So we have the federal and state income tax withholdings of $24,000. Remember, that's withheld from the employee's paycheck. And health insurance and contribution to retirement plan are both paid by the employer. So there's no payment by the employee. And then finally, we have FICA, also the federal and state unemployment tax. Remember, FICA is paid both by the employee and employer, while the federal and state unemployment tax is paid by the employer. Okay, so let's look at the accounting entries. So remember that the expenses are always recorded on the debit side. The expense to Hawaiian Travel Agency payroll expense is the gross pay, which is the $100,000. So we have to debit salaries expense for $100,000. On the credit side, normally would have had $100,000 in salaries payable, right? And that's going to the employees. But since we have withholdings from the employees, as well as FICA taxes from the employees, then the employees are not going to get the gross amount. It's going to get a net amount. Deductions from the paycheck, we have the federal and state income tax withholdings of $24,000, and we also have the FICA tax of 7.65%. Let's take those out. Income tax payable, that's going to a payable, and then the FICA tax payable of $76.50. And the remainder will go to the employee as the salaries payable. Next, we'll have to record the employer portion of the salaries expense. Now, the employer is paying, in this case, $5,000 in health insurance and $10,000 in retirement plan. That's part of the fringe benefits. So let's first record the fringe benefits. So the salaries expense again will be debited 15,000, and what makes up that part? That's a payable to Blue Cross 5,000, another payable to Fidelity at 10,000. And then we're going to look at the payroll taxes that the employer has to pay. Payroll taxes, as we know, 7.65%. That's the employer share of the FICA. And also employer has to pay the federal and state unemployment. And in this case, the rate is 6.2%. Use that to multiply the salary at 100,000 gross pay. Total to pay FICA payable will be 100,000 times 7.65% at 76.50, and then 6.2% of unemployment tax going to the payable. And those two together will be debiting payroll tax expense.